Hey, in this video, we are going to be talking about the biggest question that we get asked all the time. How much money do you need to start in property development? If you're new to this channel, please make sure you smash that subscribe button and hit the notification bell. Also, give me a like right now, and please feel free to ask any questions and leave us a comment below. So how much money do you need to start in property development? I'm here today with my good friend and business partner, Andrew Hubbard. Andrew, quick introduction. Who the hell are you?
So my name's Andy Hubbard. I've 30 years in construction. I'm a bricklayer by trade. Worked my way up to now become full-time property developer.
Wow, amazing, good stuff. So the question is, how much money do you need to get started in property development? And I just want to make something very, very clear. You can actually get started in property development using none of your own money. However, you will need money for developments. You've got purchase price, option agreements, you've got development costs, you've got build cost, professional fees, and we're gonna do a deep dive now on giving you all of the creative ways in which you can actually use none of your own money. So, first option is that you can use something called private funding. There are hundreds of thousands, millions of people in the UK right now and across the world that are sitting on bundles of cash. And yes, it has been a very difficult time over the last 18 months, but there's more money in the world today than ever before. It's not gone anywhere, it's just been redistributed. And people are sitting on money right now. They've got money in their savings accounts. They've got money that they can pull out of pension products. They've got money sitting in stocks, shares, ISAs, bonds. They've got money sitting in their businesses. And that money is not working for them. And if you've got money just sitting in a bank account, it's actually going down in value, isn't it, Andrew?
Absolutely, especially with inflation as high as it is at the moment.
Yeah, the cost of living is going through the roof. Energy prices are up, food costs are up, wages seem to be going down. So if you've got money just sitting in a bank account, you're losing potentially 3, 4, if not 5% a year. So private funders are looking to deploy capital, and they will give you the cash. So one way in which I've done over £28 million worth of property deals in just the last 6 years is by working with private funders. So I'll give you an example. Let's say, for example, a development is going to cost £500,000 all in. Purchase price, legal fees, professional fees, development costs. You could get one or a number of private funders to lend you the money on something we call a savings accelerator. You might get 10 people at £50,000 each, and you might agree to pay them, let's just say 6% per annum. Now you could pay 8, you can go 10, you can go 12. You can agree to pay them whatever it is you agree. And that's what I really love about private funders. It's a blank piece of paper. So let's just say you borrow £500,000 at 6% interest and you need the money for 1 year. At the end of the term, you would pay back £530,000. It's only cost you £30,000 in interest to borrow that money. You could use that £500,000, buy the development, build the development, sell the development, and let's just say, for example, that development is £1 million GDV, and you're gonna make 25% margin, £250,000 minus your £30,000 interest. You're looking at £220,000 profit. So one of the reasons I love the savings accelerator so much is that you're not giving away any type of share of the profit. You're just paying back the interest that you agree with the private funder. And look, people are going to lend you money. Andy, you know, you've obviously been raising money as well. You know, it's not that hard, is it, actually finding private funders?
It's a lot easier than what you think. I think the biggest thing you've got to do is just tell everyone what you want to do.
Yeah.
Once you start telling people what you want to do, their ears are going to prick up, because like you say, the money's sitting in the bank doing nothing. It's actually going backwards. And people want to get their money earning money. It's as simple as that. And they're not going to get interest rates going up anytime soon in the bank.
Yeah, so how do you do this? Well, you've got to get to know people. Once they know you, like you, and trust you, they lend you the money, build relationships. You know, I spend a lot of my time, you know, racing fast cars, going go-karting, spa days, eating nice foods, going to the theatre with some of my private funders. It's all about building relationships. And the good news is you are investable even if you think you are not. And something we do, Andrew, on our 3-day Property Developers Bootcamp, which is our brand new advanced training showing people about developments and how to get started. One of the things we cover in a lot of detail is actually how to raise the money, don't we?
How to raise the money, how to position yourself. I think for someone who hasn't got the experience, they think they're not investable, but it's actually far from that. I mean, people with investors, people with money haven't got time. So many people, you know, a lot of people have got time on their hands. Some people have already got the deals, so they've already got something that they just need funding, but people with money haven't got this. So it's just a case of fitting you two together, and it's a win-win situation. You borrow the money, give them a better return on their money. You borrow their money and you go make money on their money as well.
And it's really exciting working with private funders. And once you master this, and you know, we've had literally hundreds and hundreds of graduates go and raise joint venture funding and do no money down deals, you will never, ever, ever worry about money for any property deal again. Find the deal, you know the money will come to you. And once you pay your private funders back, they're not going to want to leave you.
No.
Rinse and repeat, and you build up this pot of cash. You know, it's one of the reasons why I've currently got over £9 million in circulation from some of my private funders. So that is option number one, private funders using a savings accelerator type product. The second way in which you can fund your developments is something called development funding. Now, I've raised a lot of development funding. You know, Andy also has raised lots of development funding. So Andy, over to you on this one. Could you just explain to our viewers what exactly is development funding and how does it work?
Yep, so development funding is specifically for doing developments. It's very different to buy to let or your own mortgage. It's all focused on the deal. So people think it's all about them and their experience, but in reality, they're looking at the deal. Now, the biggest thing for me, what changed what I was doing, was I learned that development funding will actually forward fund some of the money for the purchase as well. So I was thinking you'd have to buy all the land in one go, but as a rule of thumb, they'll give you 50% towards the land value. So you've only got to find 50% of that land money. They'll give you the other 50%, and then they'll also give you 100% of the money to build the whole thing out.
Great.
They'll also pay your project manager's fee, finder's fee. So there's lots of different fees that they'll pay you, but you really do not need as much money as you think to do developments.
Great. And look, if you're in a position where you've not used development funding before, sometimes, depending on the size of the development, it may be a challenge to get that over the line, but that's when you can also JV. You can JV with other developers, and I don't know about anyone else here, but I'd much prefer 50% of something than 100% of nothing. But once you get development funding for even a small development where you're just saying doing a demolition and building a house, you get what I like to call the blue tick, the development funders blue tick. So once you've got it once, they will keep lending to you time and time again. So what happens over a number of years, you start to do bigger developments. You know, one of my developments now is 9.5 million GDV, 26 units, commercial space. You're doing some big stuff as well, Andy. You know, 6 years ago, I wouldn't have got funding for that. But because I've now got the track record, we're able to get more and more and more and build and build and build. And, you know, you can pretty much do what you want. So development funding is a fantastic option. So the way I like to work it out in my mind, let's say, for example, we need £1 million total cost. Typically speaking, of the total cost, you can get sometimes 75, 80, 85% of that just from the funder. So if it's £1 million, you might only need to find a couple of $100 grand, £150,000. And again, that doesn't have to be your money. That could be with a funding partner. So lots of ways to do this.
I mean, with the development funding, you've also got different layers. So, you know, you get the bulk of the loan at a low cost. And then as you take on these little layers, mezzanine, They become more expensive, but they're smaller slices of the pie. So the interest may be 20%, but you may only be borrowing 10% of the total cost.
Wow.
So that's the good thing about it. I mean, you can borrow up to 98% of total money needed. You just putting in 2% of the loan.
Wow.
So it's really, really good. I mean, 2% is nothing to put in on a deal where you can make 6 figures or even 7 figures. But the biggest thing for me on development finance was it's very personal, it's relationships. When you go and get a mortgage for a buy-to-let or a bank, it's a tick box system. With development funding, it's very personal. You go to meet them in their office, they get to find out a little bit about you, you build a relationship, you get the personal phone numbers of the directors. One of mine come and visited my site the other week, or just earlier this week. He came out to visit us, see what we was doing, very impressed with what we're doing. They're already talking about lending on the next developments, better rates. You'll find this as you get going. The first one, you're going to pay the most money, the biggest interest, but after that, the interest comes down and down and down because, like you say, you get the track record, and then they are literally are throwing money is not the right term, but the money's there.
Yeah.
You can go and get a deal, and the money's there all the time. You don't need to worry about the money ever again.
Yeah, wow, amazing, great tips there. The third way in which you can raise money for your developments is something called crowdfunding. Andy, a bit more information on crowdfunding? Yeah,
so crowdfunding's been around for a while now. It's becoming more popular. It's not just in property, it's been used for many things around the world. And it's where lots and lots of people, peer-to-peer, will put in small amounts of money. Some will put in large amounts of money, but some people put in as little as £100. And for that, they'll get either a percentage, like a return on investment, or there's different types of crowdfunding where you can actually invest in the scheme as an investor. But you might ask why someone would put in £100 or £200 to maybe make 20%. It's because they want to learn from the project. So it's almost like an earn and learn thing. So that's why crowdfunding is really exciting. It's exciting if you've never done this before, but they can get to sit there and piggyback off the back of a project. So they can see the project go through planning, they can see how the money's raised, and they can see who's invested, and then they can see the project getting built. And it's just really exciting for the people lending, and it's really exciting for the developer who's getting their developments funded as well.
Yeah, I love that when you say earn and learn, because a lot of people out there are sitting on money. They don't know how to do this. Who doesn't want to be a developer? Yeah. Because there's massive money to be made. There's big opportunity right now up and down the UK. We've got a massive shortage of homes. And, I wouldn't consider myself a big developer. I'm a small developer, but make big profits. I'm not looking to go and build 60 homes, 100 homes, 200 homes. I like the smaller type sites, build 5 houses. One of my units was 9 dwellings, 14 dwellings. Okay, I'm doing one now, 26 dwellings, but that's pretty much the level that I want to go to. What's been your experience as well with some of the sites that you've done?
So yeah, we do small sites. I mean, we'll still do single builds, 6 figures on a single build. Certainly won't walk away from that. 4 or 5 months to do a build and 100 grand profit. So 12 months from sort of buying the site, getting through planning, building and selling, that's pretty quick to sort of make that sort of money. I think with crowdfunding, it's great if you're just going to build your first project or 1 or 2 or 3 units. So £250,000 tends to be the sort of sweet spot. And the reason for that is because that amount of money is raised very quickly.
Okay.
So the crowdfunding will help put your pack together. So this is the deal. This is a developer, this is their experience, this is their power team. So the crowdfunding platform will help you do all that. They'll put your project live. And sometimes these projects are funded within minutes. There's people queuing up, literally saying, I want to get invested in that project because of where it is, what it is, and I want to learn from that project. And it's very quick money. 6 to 8 weeks, you've got all your money in it, and it's forward funded as well.
Wow,
so
fantastic. And it tends to be a bit more expensive, doesn't it? As the developer,
slightly.
It's a little bit more expensive. So it's probably cheaper to go find your own private funders at 6%. You might end up paying 10 or 12% and some type of fees. But at the end of the day, it doesn't matter about how much money you pay to borrow money, it's the bottom line numbers.
We always talk about return on investment.
Return on investment.
Yeah, not how expensive the money is.
Yeah, fantastic, great. Okay, the fourth way in which you can go and raise money is something called bridging. Bridging is something I've done a number of times. It's a great funding solution to get you from point A to point B in the fastest possible time. And bridging, again, can be a little bit more expensive. You might be paying 1% a month interest. You might have some admin fees, some finance fees, some survey fees. But again, if that's one of the ways to raise the money, it doesn't really matter what it costs as long as it's the ROI. Have you had much experience with bridging? Is it something you've done before, Andy?
Yep. So we like to look at bridging as a speed, the need for speed. So, I mean, bridging is just that, it's a gap. So it's to bridge you from where you are to where you want to get to. It's not a long-term funding solution, but you may be buying a project, maybe a house that you're going to demolish. So the bridging will be a great way to fund that purchase. They will take security on that. And then while you're going through the planning, you get your planning, and then the bridging loan will come off that and go into the development loan, which will pay off the bridging loan. And the idea is that you add the value, and then eventually you could get all your money back out before you even start on-site building.
Great.
So it's like I say, more expensive, but if it's the good solution for what you're trying to do, it's almost like it's irrelevant what the cost is.
Yeah, so certainly don't turn your nose up at bridging.
No.
It's something you can keep in your armory. It's a tool that you can pull out the bag if you need to get a development over the line, or you need to finish a development, or whatever the case may be. Now, the fifth way in which you can do developments using none of your own money is something called joint venturing with joint venture partners. So some investors, they're not interested in a fixed rate return. They're, if you say you're going to give them 6, 8, 10 or 12%, they're not interested. They can do that in their own businesses or own developments all day long. However, there are a lot of joint venture partners out there that are sitting on a lot of money, and they will give you all the money, but in return, they're going to want an equity stake. So they may become a shareholder in your company if they're a high net worth or sophisticated investor. So typically, the way a joint venture will work, they put in the money, you do all the work, and then you share the profits, maybe 50-50. Could be 60-40 you, 70-30 you, but let's just use a simple example, a 50-50. So let's say, for example, you sell all the units, 10 houses, £100,000 each, £1 million profit. Let's say the profit is £1 million. Half of that will go to your joint venture partner and half will come to you. 50% of something is much better than 100% of nothing. Now, I typically don't do that many JVs anymore. I did them more in the beginning because I'm either my own bank, and we'll talk about that next, but I'd much prefer to raise money on loan coupons at 6 or 8%. But, in your experience or what you know about JVs and 50-50s, how have they done for you?
Yeah, I mean, I look at it a different way because I look at more joint venturing with the landowner.
Okay, this is good.
Instead of looking for the money for the purchase, you joint venture with the landowner where they gift the land. You can bring in the money, 100% development funding, we talked about that earlier. And then again, you carry out the build, split the profit 50-50. And yeah, technically you've put no money in whatsoever, none of your own money anyway. Yeah. And I was going to say, this is a great way you can actually pay the vendor more money than if they was going to sell it.
Right.
Because not only can you give them the purchase price, you're sharing the profit. So let's say a plot of land is worth 400 and they're adamant they're not selling it less than 400, you can potentially offer to pay them 450 or even 500 because you're not putting in the purchase, you've not got the interest element on that, the land is gifted, the profit's at the back end, and you split it. Because people who are holding out for the price, they're not selling for speed.
Yeah.
They're holding out for the money because they don't need to sell. The ones that sell at a discount need to sell for speed, which is where your bridging comes in. But yeah, joint venturing with landowner is gold.
You have a whole section of this, don't you, on your 3-day
whole section
property developers bootcamp?
Yeah, I mean, what I want is when I teach people what to do, I teach people to find a way to fund every single development, because you've got to look at why the vendor's selling. Are they selling for speed or are they selling for the highest prices? It's going to be one of those two things. But we're armed with all these multiple ways to raise the finance. You should be able to fund every single deal.
Great, cool. And the last thing we want to share with you, and this is the ultimate goal, by the way, and it may take you some time to get there, or you might just be able to do this from one deal, is that you will eventually become your own bank. So you make profits using other people's money. Your profits could go into a holding company. I'm not a tax advisor, so you have to get your own tax advice, but I have a holding company. I know Andrew's got a holding company. All of our monies move up to our holding company, and then our holding companies become the bank charge interest on money that we lend out to our different special purpose vehicle companies for our development. So I know you're big on this, Andrew. You've funded quite a few of your own developments. So just talk us through your experience.
I mean, raising money is fairly easy. I think it's easier to find the money than the deal, to be honest.
Yeah.
And again, if you find a good deal, you'll always find the money. But my objective from the beginning was always to become my own bank so that we could fund our own developments. We could prove purchase of funds, for example. But also, when you become the bank, you can then start investing in other people's developments for the 50% profit. So you could be doing your own developments with your own money, lending some of that surplus money out that's sitting in the bank doing nothing, and again getting 50% of somebody else's development that you can obviously shadow and handhold them through the deal. Wow. So, you know, you sort of doubling your money every single time.
Wow. Hey, look, there's 6 really big ways that we've just shown you there on how you can go and fund developments. So if you're watching this now, you're tuning in, and the thing that has stopped you from getting into property, becoming a developer, is the thing called money, then there is no more excuse, because you don't have to use any of your own money in order to become a property developer. If we can do it, you can definitely do it. If you are new to this channel, please make sure you hit subscribe now and the notification bell. Smash that like button. Of course, ask us any questions below. Leave us a comment or two, and stay tuned for more of our amazing development videos.